All right, just a quick audio check here. Testing 1, 2, 3. Let me know if you can hear me okay. Thanks. Okay, looks like voice audio is A-okay. All right, well, we'll get started in about a minute or so. All right, welcome everybody to Stock Analysis Friday. Great to have you here. All right, so today, June 16th, 2023. All right, so the Fed kept the interest rates flat this month. So we'll see what how the market responded the day, right on that day, sold off, and then now since has recovered. And Dow's back up. Dow's about even today. So, all right, so we'll see if this unwinds. All right, let me go through a few administrational items. First, I just want to welcome everybody. And Art, I see that you're short on time today. I'll get to yours first, okay? So we'll get those hammered out for you before you have to go. And also, too, let me just go through the administrational items quickly, and then we'll jump into the charts. Okay, so first thing I got to go over, of course, are the risks involved in trading. There are risks, like I always say, without that risk, of course, there is no opportunity. So the two really go hand in hand. We want you to be aware of the risks, however, okay? It's really important to know that we work in a realm of probabilities when we trade the financial markets, not certainties. And therefore, past performance as well does not guarantee future performance. We want you to trade with money you can afford to risk. That's called risk capital, very important. And check with your financial advisor before actually taking any of the concepts or trades we talk about today, just to be sure they're suitable for you. We don't know your personal situation, and of course, they should. And then finally, please use risk control on every trade. You know, I keep saying that over and over again because it's absolutely vital in order to be successful in this business to have good risk control. We can help you with that. I got a variety of books on that. So you can check those out, like the Money Management for Traders, Traders Money Management System. Also, too, I'm really excited about a new book we're coming out with later this year. It's being published by Wiley, and it's called The Art of Trading, second edition. You know, we came out with our first edition. We want to go way back, about 2008. So we're due for the second edition. We got a lot of new material in there. It's a great book. You can pre-order it now, and I'll put the link up in the recording. And also it's on our website as well. And then I've got books on Elliott Wave and so forth. And then finally, you know, when we look at charts, we're going to be using software that I developed over the last 30 plus years trading the financial markets. And we've got charting software, scanners, risk control software. And you really need software in all those categories because the scanners find the stocks for us. Charting software manages the trade, including entries and exits for us. And then the risk control software, of course, is like wearing a seatbelt when you get into a car. It keeps you from crashing in case the trade does not work out as planned. So that's our software. And then finally, we want to thank you for being here. We know Friday is a busy time for everybody. So thanks for taking the half an hour to an hour out this morning and joining us. The more people we get here, the more stocks we can look up. So it's actually really good to have a lot of people here and really be busy looking stocks up, because then we can find those needles in the haystack, so to speak. So great, again, to have you here. All right, and as Jeannie always says, please like us, subscribe, share, all that good stuff. All right, so let's get out of here. All right, and let me just put the data window up so we've got that. Art, before I get to your list today, a couple things. One is what you're looking at here is My Ninja Trader, okay? And the scanners are at the top. All right, that's the multicolored thing here. We're not going to be using those today because we're going to be specifically looking up stock symbols. But if we were basically trying to find trade setups, that's when we use the scanners at the top. You'll notice I have 3 charts loaded, all of, in this case, the same stock called Amazon. And when we look at a stock, for those new here, we look at it through 3 different kind of lenses. We look at it as a short-term situation, an intermediate situation, and a long-term. And so therefore, each chart you see in front of you here represents one of those time frames. So on the far left, we have a 60-minute chart. And what does that mean? Well, it means that each price bar only represents an hour or 60 minutes. And so you're going to see things about a stock differently on that time frame than you would, let's say, the daily chart like we have in the center, which is kind of your more typical chart people use when they look at markets and also when they position trade. And so that's what you're looking at there. And then on the weekly chart, far right chart is our long-term look, and those price bars represent 1 week per bar. So you're looking basically 5 trading days are condensed in one price bar. And the good thing about that is it takes a lot of the noise out and gives us a good look at a stock from a longer perspective. So using, when we look at charts in this manner, it's called multiple time frame analysis. And then I load my software on each chart, and then we go and analyze each time frame and see, A, what's the best time frame to trade, but also, you know, is it a good time to enter, or maybe is there a little bit of a pullback coming based on the short-term chart? So it helps you with entries and exits and also risk control. All right, so I want to get that out of the way. Quick question, how many are in Amazon? Okay, we recommended Amazon, we recommended Google before. Great stocks, they're doing good. We still think they're great and still recommending them, but hopefully that is okay. All right, so getting a little feedback here that the audio is not clear. Okay, let me know if that's one person or everybody. All right, audio is raspy. All right, let's try to see if we can change mics here and make that, okay, let me see if we can change mics. I got to tell you, it's a real pain in the neck. Every time we do one of these things, we never really know which mic is going to be the one to use because we have problems with them intermittently from session to session. All right, so give me a minute and let me switch out. All right, so I switched mics out. I'm on a different mic. Does that help? Let's see if that helps or not. Hopefully it does. But let me know if anything like that happens again. So if it's okay now, but it goes offline again or something, you got to let me know, or else I'll have no idea, basically. So I'm just going to wait a second. Let me know if that is better. Yes, it helps. Good. All right, good to know. All right, good job, guys, because I have no idea when that happens. All right, so Amazon, great trade. Okay, it's not too late to get in it. You will get a pullback, so you do have to have your stop pretty far away. You can always use an option and just basically not worry about a stop as long as you have the risk control built into the option. All right. Let's take a look at yours. MOS. Let's see what we got cooking on Mosaic. All right, Sue, bring that bad boy up. Okay, so on this one here, it's still pulling back. And I say that because on the time frame that represents the daily price bars in the middle. We've got a red PTF and we still got bearishness here. We kind of, we had bullish divergence here, so we got the pullback on that. And this is, I got to say, we're probably getting close to a bottom, but it looks like maybe one more time. So I think I would kind of stay out of that one for now. And after that bottom is confirmed, then you want to go long because we should make more highs on this. In other words, get above like 80 or something on this on the next big impulsive wave move up, which basically is the same way as saying the next big trend up. But with the red on the daily chart, you don't want to go into it right now. Let that red unwind, come back and see us next week. You got a good week or two, I think, before you'll see the possibility of that changing. All right, ROOT, let's take a look at that bad boy. All right, so root. All right, what I like about root, and I do like it, okay, is that you're getting in on at the beginning of after a big trend down. So let's just break this down. You know, when you break down trading, it's basically you're a trend trader, you're a scalper, and that's pretty much what you are, right? Or an investor for that matter. So what we're trying to do here is kind of catch a new trend. And so this is a really outstanding one. So I think really, I really like this one. I think you can go long in this now. All right. And let me just grab a pen and pencil because this is a winner for today. Okay. ROOT. And you know, if you're going to go long, let's put your stop under this price bar here. It's not a very expensive stock, but so most people can join this one. The low on this for that pyramid is $4.29. So you want to put your stop one tick under that. At least $4.28 is where your stop needs to be. Now, you'll probably get a pullback at some point, but let's try to stay in this for a while because the potential for just a normal retracement is huge on this. I mean, you're talking, you know, not 100% return, but probably a lot more than that. Okay. So the idea is you're getting in early. You can set your stop really low, which is great, right near the bottom. You can always use the bottom if you want. If there's an option and you want to do an option play simply by buying a call, you could do that. Make it a long-term option. Okay. And it's great. It looks really good. So if people decide to cover their shorts, take some profits, that's going to yank it up even more. And then you might have some people jumping in just for the opportunity of getting into the next move to the upside. So good one on that. Moss I'd wait on. Moss could be good, but a little bit later. Okay. So Art hopefully got through that. Okay. All right. Let's see. And good morning to everybody out there as well. All right, let me see what else is coming in. Okay, good. Volume set. The audio is good now. Excellent. All right, good. So let's take a look real quickly. I wanted to take a look at one of the cryptos today. Go ahead, you guys can go ahead and type it in, and I'll get to your stocks. Type them in caps for me. All right, but let's quickly take a look at crypto because you know when we talked about this coming up, I said, oh, we're going to get a pullback, and we got it. Okay, so we have had the pullback. The question is it over? And as long as this owl here, which measures momentum on the daily chart, is red, I'd hold off. Okay, hold off on that. So let's look at that next week. I don't think it's going to be a buy before next week. So let's see if we can get some stability on this movement down. It's due for a move back up, but we just got to wait for this move down, this correction down to end. So I'd hold off a little bit on that. Okay, definitely. All right, LTC. Let's take a look at LTC. And this is for Mark. How you doing, Mark? Okay, so LTC, here we go. All right. Let me open up that weekly chart. I'm going to open up the weekly chart quite big here. All right, so on the weekly chart, you can see on this chart that even though it's an uptrend, you've got to give this thing a lot of room or you're going to get stopped out based on just the normal volatility of this stock. So whenever I look at a market like this and I see that kind of volatility, but there is direction, and the direction was up, you right away know that you have to be careful about putting your stop. So I always use probably a second pyramid at least for my stops on something like this. I don't use the closest one. However, all right, that uptrend ended right here when prices actually went below that key level of support on the way up. So we're kind of in a sideways broad market. Now you could scalp inside this if you choose the right time frame. The daily time frame may or may not be the right one. We'll take a look, but it may be even shorter, like the 60. But right now, basically, any trade to the long side, you're assuming the bottom's in. And in order to assume that, what we have to do is see if it did retrace enough for this to have that kind of probability. So let's yank it up here. Okay, so it did hit the target zone. So that would be an okay assumption. All right, we no longer have a red PTF, so everything is looking pretty good there. All right, so next thing we got to go and see is what's cooking on these charts here. All right, again, what I like about this is it looks like an A, B, and then C, and you can even see the 5 waves inside C pretty dramatically there. So I think probably we got some form of bottom in here. My only thing you got to be careful about is the longer term chart has 2 things going against us. 1, a red owl, and 2, technically still an active red pyramid. So any trade you could take now, all right, you'd be basically a little more risky than waiting for these dots to connect better on the weekly chart. However, if you want to get in early, there's sometimes where you go in based on the daily and also here, as long as there's a possibility of a bottom on the long-term chart. So what I usually do is just reduce the trade size by half because I'm going against the longer term chart. But I think you should take this trade. Okay, I think it looks pretty good. Now, another caveat with that is notice we have bearish divergence building in the 60-minute chart. So we're due for a pullback. So if you wanted to wait, you might be able to get back in around 32.5. All right, if you wanted to go in now and put your stop as far back as you can, I would do that, or buy a call option. You could certainly do that. So I'm going to put it down as a possible buy with that one caveat is that you've got to have your stop placed correctly. Do not use the pyramid here because after the first big move up, you can get 100% retracement. So you want to put that stop at the very bottom or at least below a fib retracement, but bottom is better. So basically, I would recommend this as a buy today if you can put your stop at 30.86. So, but your payoff should be, well above 45, probably $50. So that you definitely have the risk to reward in your favor, but you just got to keep that stop fairly far away. Okay, that's LTC. So we're going to put that down as a buy, and I'm going to write down provided stop is at bottom. Okay, or you use an option and control your risk that way. Okay, all right. So we found 2 so far. Good job. All right. Sergio is asking back to root, what's my target? So let's go back to root for a minute and check that out. Give that a second to load. Target's huge. Okay. So right away, what I would do here is if you grab the fib retracements and just do a fib retracement, I mean, you're talking 168 as a possible area once it retraces to the fib area. So, that's very, very good, obviously. Okay, but you're going to have to be in that a long time. That's not a short-term trade in terms of getting there. It's going to take a while. All right. The other thing, too, is when we're in a trade like that, the target is so far away, we'll probably scale out once or twice on the way to the target based on what our indicator's telling us. Okay, especially if we want to use that money for something else at the time. So that's always a possibility. All right, DAL. Let's take a look at that. So when I do targets, basically what I'm using either is a fib retracement or fib extension, or I'm using the PTF indicators if it's a scalp trade. All right, so DAL, let's see what's cooking on this one. All right. Boy, very similar to the other one we looked at, right? Big move down here. That definitely hit the retracement area. And then now we're starting to move up. Okay, so bullish on this chart. All right, bullish on this chart. Let's take a look at some of the other charts here. Bullish on this one and bullish on that. All right, so here we go again. All right, it's already in the last, what looks like, 2 weeks, has gone from 32 to 42. It's due for a pullback. So if you get in now, you've got to stomach that pullback. It's going higher. We have green on both the short and intermediate time frame in terms of the PTF and owl. You have a green owl and a pyramid on basically all three time frames, putting you long. So again, where is this going? Well, I would expect it to go above this top if this is a bottom. So you're talking about quite a good run here up to around 65 or 70. So I'm not worried about the risk to reward at this particular point, but I am worried about if you went in now and it pulled back to 38, because that would be basically a normal fib retracement right around that ballpark. You'd have to be okay with that. So you could either wait for the pullback, because it will come. Doesn't mean it's not going to make another high first, but it will eventually come. Or you can use an option and not worry about it and just control your risk once again through the option. But that's kind of where we're at now. So I'm going to put this down as a long-term, like LTC. It's a long-term, provided the stop is, the stop's got to be below at least a fib retracement. So let's just quickly do that on the 60-minute chart. So you have to have a stop below 36.85, and we're at 42.99. All right. So yes, I do think it's a great trade to the upside. I just think over the next probably, I'm going to say 3 weeks, 2 weeks, you're going to get a pretty good pullback. All right, so that is that one, ABNB, and this one is for Mark. All right, let's see what we got cooking here. All right, again. All right, so not much history on this one here, Mark. We go back to about, 2020, the end of 2020. So we can't really get a good fix on the Elliott wave on the weekly chart. Let's see if we can get some help here on the daily. All right, so big move down, bullish divergence on the owl, and the owl is our histogram. So you're seeing bullish divergence here when you had another low there. This bottom seems to have held. You had your 50% retracement, say it held. Now we're moving up, all right, off that. So my only issue with this one right now is because I don't really have a lot of history, I can't really formulate that much of a target zone on the daily chart. Let's open up to 60, because that'll have more price activity, and see if that kind of helps us. I wish I had a PTF up here, because that would help a lot. I think because the target is not that clear on here, we could go up above here. This is an impulsive wave of some form, then you're probably going to end up in this target range here. You're kind of, up there. I'd love to see a pullback and then go in. This would be bearish divergence once it clears the top. So you're probably maybe looking at around 145. Let's just quickly actually draw some fibs on this. And we'll use a couple of extensions here. 138 to 160. So 149 is the mean. So right around 145, I think I said. So a little bit in the mean area is possible. And you can see we're close. So here comes the problem. Where do you put your stop in order to be able to handle a pullback and still have the risk to reward? That's a tough one. All right, so I like it. I think it's going higher. I'm not going to recommend it simply because I think this one you need to wait for the pullback. Okay. Again, if you want to use an option, you can do that and eliminate that type of risk on that one. So there's no problem with that one that way. Okay, so that's ABNB. I want to take a look at Ford because this is one we recommended last week, and let's see how that one's doing. Awesome. Okay. So this is a really nice one. We found this last week, guys. All right. So being here, we found it. That's how good you guys are at this. Okay, so here it's coming up. All right. It's still moving up. I think it's a good trade because I think on the weekly chart, let me open that up. We're looking for at least a PTF high here. So here's the PTF indicator, 75% accuracy rate. And so when basically whatever the highest price is in a green area, that's the target. So if we take a look at this, the PTF is saying we should get above a high, and that's 25.87. And the prices are at 14.49. So that's almost 100% return. Okay, you got to love that. And you're getting in pretty close to the bottom. So I definitely would hit this one again. It's still, I'm going to put that down as a recommended one because there's still movement for that. Yeah, you're going to get a pullback. So put your stop on this pyramid here at 11.95 or use an option. Okay. So it's looking pretty good there. That is Ford. All right, let's keep going here. Hi, Al. SPCE. All right. Al likes to look for the bottom fishing patterns, and I love that because that helps you get in trends early. Okay, so Al, keep this one on a watch list. Do not short it. Do not go long. And the reason is we've got a red PTF, but that's gonna take it down one more time, most likely. So you don't want to go long yet. All right. Let's keep an eye on it and look at it next week. I don't want you to go short because I think it may be just one quick little move down and that'll be the end of it. So let's it's spiked up a little bit today. You can certainly see that there, but now it's basically what I call a 3-3 price bar, and that now it's spiked up to the 1 position, 2, now it's at the 3 position. So that's a bearish price bar. So we'll see what happens with that. But I would not do anything with that, okay? Not yet, but we'll look at it again. All right, let's take a look at AI. All right, so this is one we looked at last week, and we kind of liked that a lot because it was moving up off a bottom. So let me just open up the weekly chart here, and this is how powerful bottoms can be. Now, there was not much history on this one. Had a high of 180. We drew in our fib retracements, and basically we were saying 74 to 114, which seems a little extreme when prices are down around 20. But look what's happening. And what makes these fib retracements usually work is after a big trend, either up or down. In this case, it's down. You have people shorting the market. Okay, there's probably not much good news on the stock, so nobody's buying it. So the abundance of short positions and selling at that particular point is what's driving the stock down. Then it gets to a point here where the downtrend is already mature. So shorting at that point doesn't make as much sense. And also, too, there may not be any news out yet to make people buy. And so it kind of sits at this bottom range. And all of a sudden, maybe something came out somewhere, or some of the shorts decide to cover because they're not seeing any more downward movement. And so that causes it to blip up. That blip up will stop out some people here. There's no more selling. And so now you're getting covering and possibly new buying. And now it starts to show up on the radar screen of people looking that are bottom fishing and looking just for breakouts from a bottom. And now you got that. Then it reaches this level, and any shorts that were hanging on are probably going to cover now, which fuels this thing way up. And so then now it also looks to some people trying to get into a trend. Some people will think this is the bottom possibly, and they'll get in or they'll do value. There's value people out there that may get in. And so that's what causes these fib retracement levels to work more often than not. It's not that we're just, making stuff up and drawing these levels and, hoping for the best. They have a probability behind them. And so that's how they kind of work in terms of when you see a fib retracement level, it seems so impossible to reach it. Not so when you have people covering or getting out of their positions after a long move in one direction. All right, so here's the deal with this now, though. All right, the problem is now you're getting to a point where if you could have gotten in here off the pyramid here or down in here, you would have been great, okay? Because the risk to reward's 2 to 1. Now I'm a little nervous about getting in here because even though we're going to get here most likely, all right, we don't know how far in the target we're ever going to go. And so whenever I do a risk to reward, I try to pick the most conservative area for us to reach. In this case, it's 7407, the first line that we would reach. And if I put the stop below here, you don't have have under a 1-to-1 risk to reward. So while I can't recommend this now, and also the PTF turned yellow on the daily, but it's still green, it probably will go up a little bit. Maybe you'll get a retracement and get back in. If you're in it, make sure your stop is below this bottom over here on the daily chart, which is this one here. Okay. All right. So that is AI. Let's take a look at Intel, INTC. All right. So once again, Intel, had come down quite a bit. So again, Al is obviously scanning for markets that have come down and now are breaking out. All right. So is this a major bottom here? Or are we going to go down again? This is where this indicator can help us. Currently, it's showing that this is not a major bottom. So this is a retracement, and we should yield to more lows after the retracement. So again, think about what's happening here. Everybody was shorting, no buying. Shorts are covering. Some people think a bottom's in, and off it goes to the retracement area. So if this turns back to green, then this may signal a bottom, but for right now, it's not. So you got to look at this only as a retracement trade until things change. So if we draw here to here, again, it's already almost at the retracement area. So no trade there. You're too close. Okay. All right. Let's go to Mark again on Oracle. All right, big move up on Oracle. All right, taking out its previous high over the last week or so, and also created a green PTF now on the weekly chart, as well as, let me open that up, as well as at a continuation of wave 3. So here's kind of something interesting. This is a great one for educational purpose. This was a wave 3. It looked like a wave 4. Okay. And then as this emerged, it looked like a wave 5. But look what happened. Our OWL indicator exceeded, the momentum exceeded what it was previously in this move. So this is a minor 3, minor 4, all inside a major 3 that's still unfolding. So this is not a major 3 or 4, it's a minor. Okay, so that's kind of how that works. So the nice thing is, if you were trading wave 5, you'd be long anyway. And the fact that it turned into a wave 3 is even better. So you're going to have even a nicer ride. So that's kind of where we're at now. All right. So now the other thing we got to see here is that how close now are we at the end of this wave 3? And for that, we need to go to the daily chart for some help on that. So if we do that, then we can take a look and see what's cooking. So looks like a 3, 4, 5 setup here. So let's draw maybe some extensions like this. Let me just make sure I use the right. Let me open that up a teeny bit more. Yeah, that looks pretty good. Okay, so that's kind of the target of the wave 5 inside the wave 3, except look what happened here. Now you're in a wave 3 here. So you got a lot more room, okay? This is going to pull back and keep going. So wave 3 is nowhere near over on basically all these time frames. So you're in a wave 3 here inside a wave 3 on a weekly chart, if that makes sense. And on this one here, you're a wave 3 inside the wave 3 on the daily chart. So you've got a lot of movement up. So if you go long here, you need to actually at this particular point put your stop at this pyramid here, and hope that wave 3 is not over on the 60-minute chart, because you are going to get a wave 4 retracement at some point. So I kind of probably would wait on this one. I'd wait for the wave 4 over here to retrace, and then I'd go all in, because I think you could probably get a better price on that. The other way to do this, probably the better way to do this, is buy a call option and just make it 6 months or so, and only risk what you can afford to risk on a normal trade. So good one. I'm not going to put it down because I think you're probably going to get some type of retracement on this, and then you do want to go in. So, and if you're in it, Mark, stay in it. Don't get out of it. All right. Stuart, it's GM. Usually GM is good morning, but I'm going to assume you want me to look at the car company. So hopefully that's what you want me to look at. All right. So, all right. So now it's pulled back somewhat on the daily. Let's open up this and see if that kind of helps us at all. All right. So not the greatest chart at this point, but we certainly may have a bottom here. Let's take a look and see what we've got cooking here. Okay, so maybe you could have traded this on the 60, but at this time, here's what I would do on this one. Let's wait for a pyramid. We don't have a bullish pyramid. Let's wait for a bullish pyramid, because let's see on the next move down if it remains inside this channel, or if it does this and then does that and breaks out of the channel, which at that point would create more than likely a bullish pyramid. So I would hold off on that until you get the bullish pyramid. SCHW, okay? Schwab. Now, I'll tell you a little thing about Schwab. Schwab actually is a really good company, because do you realize Schwab was a front runner in online trading back in the 90s, early 90s to mid 90s? They were one of the first brokers that adapted to online trading, while all the other brokers was basically thumbing their nose up at online trading and didn't want to have anything to do with traders. They only wanted to manage money for people in the terms of assets under management. So Schwab was the first one really to be innovative and let traders or investors take control of their own portfolio via online. And so I give them a lot of credit for that. All right, so here we are here. So in Schwab here, we had looked at this before quite a while ago, and we thought we had a bottom in here. Okay, not so. All right, came down one more time. Now, what's interesting about this is if you open up the weekly chart here, it certainly hit the fib retracement area. And this is why you got to use stops, but not everything works. Okay. And so now it reached lower. So that's probably not a wave 4 anymore, simply because it's retraced too much. So that could be something in a larger sequence, we could have basically a situation where this is a major 1 and this is a 2. It's an impulsive wave, no question about it. But that's kind of the deal behind that. So there you have that. So you can, let's remove here right now, remove that. And you got a red PTF here. So basically it looks like it's still coming down. So if it's a wave 2 after a big wave 1 up, you could retrace quite a bit more. So I wouldn't go long there. Okay. Just stay out of that one, Stuart. Okay. All right. Let's take a look at COHR. This is for Al. Okay. Don't know if you're already in this one, Al. If you are, you certainly could stay with it. I'm not going to recommend it now quite yet. Let's wait for the pullback. It's gotten away from us a little too much. So the target is going to be above 100. Okay. Now, if you wanted to buy an option here, you could do it. Or if you wanted to go long here and put your stop, you'd have to put it down here. That's 50% of where prices are now. I'd wait for the retracement and try to get in and then put your stop under this pyramid. So wait for the pullback. Okay. You're not in. Okay, good. So put this one on the watch. It's a good one potentially, but it's just gotten away from us too much right now. All right, BSX, Boston Scientific. Okay, so, all these stocks have had a tremendous run up on, the market's been bullish for like 8 months now, since it hit a low back in October. So basically, maybe even more by now, but basically, when we look at things and they're so extended here, the problem is you get in up here is much more riskier than trying to get in down here, because what you can have is a pullback. And you certainly have quite a bit of red still showing here. So I think on the next correction, we're going down quite a ways. So I'm not going to recommend this one. If you're in it, okay, our system would have had you stopped out here in the 50s. Okay, but if you're in it, you want to put your stop down here a little bit lower, you could do that, or use a pyramid on the chart here, which would be 51. So you got to you can stay with it, but you want to have a stop in place because it's due for a reversal at any time. And then SO, let's take a look at that one. Okay. So SO, I don't know if you're trying to consider a short position or a long position. Do not go long. Okay. Short only, based on the PTF, we should take out this bottom here. I would wait. This is bullish right now. You have green and green. So you're getting a little bit of a move up. Now, in terms of what we'd look for like this before going short, I think it's probably going to 73. That's basically the point of inflection for a normal retracement. So I would look for it to get there, and let's see if it rolls over then. And when this turns bearish to the downside, and this, you might even get a green owl here for a little while. I hope you do, because that will set it up for another red one, and that's when the ideal time to get in. So PTF target on this would be down here around 61, a little under. We're at 71. So let's see where this move up is measured on the 60-minute chart is done. That's why I like to look at these multiple time frames, because they kind of tell me what's going on overall. So I like this one, but not quite yet. All right, watch list it. All right, good job. Let's see what else we got cooking. Tesla. Oh, good. Let's take a look at Tesla. Tesla. Well, Senator Paul is asking me, what do I trade? Well, I day trade futures. Okay. I don't day trade stocks, but I do take position trades in stocks. I like Ford. I have a subscription service on the stock picks I recommend. It's called MOR, M-O-R, for Market Opportunity Report. We go over the markets in general and forecast what I think is going to happen on the Dow and the NASDAQ. But then the real benefit of that service as well is the stock picks. So all my stock picks are in there that I like. All right, so here's Tesla. All right, and Tesla's moving up. We looked at this obviously before. And the target on Tesla for the PTF looks like we're going to be right around a little over 400. Okay, so it's definitely moving in that direction. So all good. All right, now, should you get in it now? Well, again, look at the 60-minute chart. Do you think this is a healthy place to get in? Not really, because you'll get a retracement. It's gone up, and look how many price bars it's gone up in a row on the daily. So from a probability standpoint, it's due for a correction. Could it go up a little higher? Sure could. Not saying that, but I'm just saying you're getting it in a much more riskier place. So I would say if you're thinking about this, if you're in it, stay in it. Okay, just stay in it. and you should get to 344 to 499, and give this thing enough room to retrace. So this pyramid right here, the perfect place to put your retracement. Okay, and notice where we drew the point of inflection here with these two lines. So we were waiting for it to get down here and turn around. Okay, and that's kind of what we were waiting to do. All right, so retracement, maybe pull back to, I don't know, 220 or so. It's at 258, almost 260 now. So I would wait for that and then go. If you're in it, stay in it. Okay, that's Tesla. All right, great. All right, let's do XUUSD. Sounds like San Diego State University. All right, XUUSD. Hopefully I have data for that. I don't think I've looked at that one before. And also to type them in caps for me, okay? Yeah, I don't have data for that, so I don't know what market that is. That may be a foreign market, okay? RCL. Take a look at RCL for Dan. Okay, so moving up, definitely you could have traded the short time frames, but the long-term time frame, let's see if, oh, we just got a green PTF. So that basically is indicating now we have a bottom in, and we probably will get above 140. So that's kind of a good thing. But again, like all the ones we're looking at, you know, is this a safe place to get in after a big run up? Not really, right? Is it going to go higher? Yeah, according to the tools. But you might have to have a pullback before it does that. So that's the problem. So I'm not going to recommend this one if you're in it. I'm going to tell you what I think you should use for a stop, because I want to make sure you get under the retracement area on this. So you want to use this first pyramid. See this one? Do not use this pyramid. Let's go ahead and put it under here. So that's going to be 73.92. That's where your stop needs to be. Far away, you see, because it's come up so much so soon. So I'll let you decide. Now, if you wanted to manage this more on a short term and get out before it turns south, then use this pyramid right here, which is basically highlighting the most recent low. So that would be 92. So your stop would be at 92. And you could do a combination. You could use the 60-minute time frame stop to scale out a half a position while putting the rest of the half down here on the first stop on the daily chart. Or you can just get out. After a big run up like that, get out and you can get back in after it retraces. Okay, that's RCL. All right, so let's take a look at ARKK. ARKK. All right, so here we are on ARKK. So that has pulled down a lot. And Al, this is for you. Let's open this one up here. And let me just put this here, but then let me just get this over here. Okay, so we've got to move off a bottom. Okay, I like that. We've got green here now. I like that. We no longer have an active pyramid. Boy, what a great short trade that would have been. So you see these pyramids, what they're looking for is fractal pattern type patterns or trending patterns, lower lows, lower highs, and things like that, and vice versa. So that's your entry here, stop here, initial stop, IS. Then you move the stops down to the new pyramids as they form. Okay, and you would have been stopped out here. So you no longer have an active pyramid. That's what I mean by that. Now, why didn't a pyramid form in here? Because the pyramids aren't looking just for fractal patterns. They're looking also for the momentum that formed those patterns. So there's a very complex calculation that's going on behind the scenes when these things form to give you the highest probability fractal patterns. So that's the deal behind that. Okay, so this is starting to come up. All right, that's pretty good. So if we get a long trade possibly on the shorter time frames, that could be good. And you see we got one. All right, we got one right back in here. Got another one in here. So you're in pretty good shape. This one is the one you would take because you still had an active down here, active bearish. So you would be long on this. And I think at this particular point, if we get just a retracement, and that's all we get, let's draw that in and see if the risk reward is any good. And yeah, that's good. Good to go. Okay, so ARKK is good. ARKK. So that's a recommended one. And you can put your stop right on that pyramid here at a low of 38.16. So one tick under that 38.15. Okay. All right. And who found that one? Al. Good job, Al. All right. DAX. Let's take a look at DAX. I think that's an index. The DAX. All right. Check out the weekly chart on this. What a mess, right? All right. Other than using the pyramid, there is absolutely no way I can determine where a target zone is on that. If you can, let me know. All right. But, you know, when we look at stocks, all right, sometimes they're messy and you can't really figure it out. Pass. You know, you've got, you know, what, how many stocks are there out there now? 15,000 or something? You know, why do you have to take one that's messy? So just pass. Okay. If you're in it, okay, and you're long, you can put your stop right under this pyramid because you've had this, you know, move up here, all right, over the last year. So you can put your stop here, but that, you know, and it looks like you got, oh, the PTF just went yellow here. You don't have a lot of liquidity on this, okay? Notice how spotty the 60-minute chart is. So I would basically not trade this, but if you are long, put your stop right under this pyramid here, okay? That's the way I would do that one. And that is DAX. All right, DG, let's take a look at that next. And DG is Dollar General. This is one is for Mark. All right, ain't doing so good. All right, came back down quite a bit after a big run up that ended pretty much in 2023 along with the rest of the market. All right, so then it turned south. All right, red PTF here still going down. Green one says we're in a retracement here. So one more, looks like more highs coming short term. Let's draw a quick little retracement in here to here. So we're probably going to get up to 170 and maybe 183 if it's a normal retracement. So if you were to go long, you'd have to manage the trade on the 60-minute chart. But I probably wouldn't touch this because we got red here and red here. So I think, you know, basically the tendency is this is going to be a correction, probably fill the gap maybe a little bit here and then head on back down. That's DG Dollar General. RUN, run. Run. Okay, let's see what's cooking on this one. All right, so big retracement after a big run up, almost looks like Bitcoin, right? Wally whoop and Wally down, okay? So on this situation here, all right, you would have been taken out long ago and been put short back in 2021. All right, so now you still technically have an active short position with a stop at 22.23, and we're at 19.04, and we do have bullish divergence. So we're probably maybe getting close to a bottom here, okay? Let's see here. Things are starting to get a little bit more bullish here, and they are bullish on the 60-minute chart, highlighting the quick run off the bottom. All right, so where is this thing going? Well, it's the first break off the bottom. What do I say about the first break off the bottom? Always put your stop at the bottom because you can get 100% retracement. So on the first move off a big bottom, we very rarely use the pyramids. We always put the stops at the very bottom to account for that retracement. And so that's where the stop would have to be on that. Next thing is, where is this possibly going? Well, you got a PTF showing 21. We're at 19. If we drew the fibs in here as a basically worst case scenario of just a retracement instead of a change in trend, that's 23 to 39. All right. So if you put your stop here, you stand the chance of getting stopped out on the next retracement, but that's the only stop that's going to give you anywhere near a risk to reward that makes sense. I would pass. Okay. ARKK. Okay. So Shannon Paul is asking, should I buy it? Well, my first response is check with your financial advisor, right? That's my first response because there's no guarantees. All right. Should you buy it? I think probably, let me answer your question with the question. If it pulls back to 40 and you bought it now, are you going to be unhappy because it probably will pull back at some point before it goes higher, but it should go higher? So that's always the question is, can you handle a pullback or should you wait for the pullback? Personally on this one, okay, it depends on your mindset. If you're trying to get to the target range on the weekly chart up here, well, that's 70, 73. And notice, putting your stop here, okay, would get you there with the 2-to-1. But when you have this many price bars in a row, you're going to get a pullback. And now you're getting in a not such a great position here. So short term, it's showing you that the trade is risky. Long term shows you the potential. I would probably wait for the pullback, but I put it on there as a possible buy because of the potential on the weekly chart. Does that make sense? You could always use an option if you didn't want to worry about having to worry about a stop. Okay. All right. Target TGT. Let's take a look at that bad boy. Another retail stock doing so well, especially after its woke policies. Okay, so let's take a look at this here. All right, it's definitely paying the price for that pullback. Let's open this up. It's kind of interesting though. It was due for a pullback anyway. You never know what causes these things, but it's amazing how they happen anyway, regardless of what event causes them. All right, so if we put that back up here, all right, so we're in this zone here. We got, here's wave 1 probably up here. So, you cannot have a wave 4 go below wave 1. So it's still got a lot of room, even though it looks pretty deep. Okay, so still coming down, active pyramid there. And interesting, you have no more red PTF here. So that's kind of an interesting sign. So you have green coming back here as well. All right, so here's what I would do. You got a red owl here. Let's see if this turns green and wait for a pyramid on the daily chart to prove itself. Okay, so don't do anything until you get that. That's target. Maybe we're close to a bottom, but let's just let it prove itself a little bit more. Okay. TGT. All right. Anybody else? We're almost at the end here. And usually what I do right when we sign off is I put the intraday time frame. I'll do the S&P E-mini or whatever market looks good. And I'll end the session on our day trading time frames. So you can check those out. Anybody else? Going once, going twice. All right. So let me okay, SOFI, okay? SOFI. Okay. So SOFI we looked at as well, all right? And we were looking for a retracement to get into this area here. And that is 1190 to 1671. So we're getting close, right? So hopefully you got into that last week. There's not a lot of history on this. We had green here on the PTF and it's still green. So it's still moving up. But again, here, we could be getting ready for some pullback before it goes back up. So let me just get this. Let me see what I want to do with that. So I'm thinking probably, let me just remove these and redraw some things in here. All right, so. All right, so let's take a look and see what we got here. All right, looks like we got a retracement underway. We got a red owl here. So Probably going to pull back to 816 to 686 at some point, which will probably kind of be right around where that is. All right, so I would probably at this time look to go long, but wait for the pullback. But if you are long, you're in good shape, okay? Because I think we put you in early enough that your stop is going to allow for that retracement. So you want to put your, if you want to, you know, when you go in again, let's look at this next week, because it's going to take a week to get down there, and we'll see what we want to do. But maybe it'll give us a break, pull back enough so we can get back in again at a decent risk to reward. Okay, if you're in it, definitely stay in it. Okay, good. All right, let's see what else we got here. AVGO, AVGO Technologies. Give that a second to load. All right, so this one's done real well too. But again, you know, these are, it's amazing. I mean, it looks like so many of these stocks at this particular point are putting you at a more risky place to get in now. But if you're in already, you're in great shape. Okay, so what do you do with this? All right, if you're in it already, I would not suggest going in it right now. Okay, we got bearish divergence on the 60. We're due for a pullback. This high is going to be taken out at some point, but we also could be in an ABC wave correction here. We're not sure yet. Pretty strong wave 3, so we're probably going to make another high first. This is bullish. This is bullish. So I think after the next high, if we can get above here, we're probably looking at then going into a daily wave 4 correction, which would be a minor wave 4 on the weekly. And then that would hurt you greatly if you were going long and didn't get out at the next high. So I'm going to say, basically, I think it's too late. If you're not in it, wait for this thing to get one more high and then correct and then get in it. Okay, that's kind of how I would play that. And don't forget, that's the way I do it. All right, you can do it any way you want, but this is just the way I would do it. All right, let's see what else we got. All right, UNG. All right, little natural gas here. Take a look at that. I love looking at this chart because when they raised our gas bill here in San Diego 1,400%, and I looked at this chart, I said, huh? Okay, gas went down. Of course, they had a supply problem. They always got some problem to blame it on, but that's what it was. All right, but is UNG a buy now? Wow, getting close. Okay, it's actually looking like a possibility here. All right, and I think we kind of looked at it before. We kind of wanted to wait and see things turn around a little bit, but they're turning. Okay, we no longer have an active pyramid. We got one active pyramid to the upside. I guess the only thing I would think of doing is you could wait for this to be green before going long, which maybe we'll take that area out here. So here's the situation. All right, let's just look at this from a pure price pattern setup. All right, so you definitely got the pyramid forming here because you are in some form of uptrend on this level, right? However, okay, you really haven't broken this key level of support yet. So technically, this could do this. So you kind of, I think, want it to break here. And if it does, you're still going to be able to get in plenty early enough for a move up here and double your money. So 1567 is the minimum high probability target zone for a wave, retracement wave 4 in here, even if it goes down again. So if it goes back up and keeps going, you're in great shape. But no harm in waiting for this. And I got to tell you, you know, it's been coming down so long. And this is the kind of thing is let's let it prove itself a little bit more by getting above that. So let's put UNG on a formal watch list and watch this one, because if indeed it is breaking to the upside, this even could be a major bottom and it could start to really go even above its high of 34. So we don't want to miss this one, right? So either way, you know, we're in pretty good shape here. So I'm kind of thinking let's get into that as soon as we can. Let's just wait for it to break that upper zone there. All right, good job. That's a good one, Alexander. All right, let's run over real quick and take a look and see what the day trading time frames. So here is gold. All right. So again, 3 screens again. All right, just like we always have. We just get that off so you can see more chart there. All right, so I got the 1 minute time frame in the middle. We got the 15-second here on the left and the 5 minute here. Now, what's kind of interesting is a lot of people, when they think these short time frames, if you talk to an investor about day trading in general, they're just going to say, oh, you're scalping the market. Well, I kind of look at it a little different because there are trends on all time frames. So you can still trend trade 1 minute time frames and 15-second time frames. So is this not a trend down? Yes, it is. Okay. You can call it a scalp, you can label it whatever you want, but it's a trend down. So the same analysis we use on the 60-minute, daily, and weekly is what we use here. Let's now run up and just take a look and see what the equities are doing. So let's take a look at the MES. Okay, that's kind of a messy market, but notice we got a PTF that's green on the 5 minute. So we got one that's red on the 1 minute. So you don't want to go long. Looks like it's going to head down again. And if this stays green and this turns yellow and we get a pyramid to the upside, we want to take that for a long trade, but it's not ready yet. All right, M&Q is going to be probably similar in terms of messiness. Yep, looks like it's going to go down. Now, if we get enough risk to reward to take a short trade just based on the PTF, you can do that. Okay, that is a scalp trade. Whenever we trade just the PTF, I consider that a scalp trade. All right, so here is, this is the, what is this? This is the Dow futures. These are all the micros, by the way, because you can also trade the regular full E-mini contract, but micros is what I have up here now. So this is not bad for a scalp trade to the upside, provided the risk to reward is there. We got an entry in here. So you could go long here and put your stop at the bottom here. Cut your trade size in half because the 5 minute still has a red owl. All right, let's take a look here. Did we look at NASDAQ? I don't think so. All right, NASDAQ, like the other equities, same thing. Got a red PTF here, so don't want to go long here. Okay, so that's kind of, M2K. Let's take a look at that. All right, so M2K has come down. All right, so basically due for a retracement. We might be getting that now. All right, so I'd wait for a pyramid possibly to the long side, and when that forms, then we'll check and see if there's enough risk to reward to make that trade possible, and if not, we'll pass. Very strong owl to the downside, so any long trade is purely a counter trend trade. So entry is very important, and risk to reward is important, and lower your trade size by half when going against the longer time frame. I kind of would not do that trade. All right, let's see what else we got here. I think that's pretty much it. Trying to find the one that actually had the possibility. I think that's this one. Okay, this one would not be bad. Okay, would have been better off this pyramid here, but that's okay. All right, it's coming down a little bit. So that's kind of, how we do this on the intraday timeframes as well. And a lot of times, I think it was last Tuesday, we were here for 2 hours and didn't take a trade because the setups weren't right. So you got to be really patient, even on these short-term timeframes, to get it correct. Okay. All right. Anything else? All right, let me just see here. I think I'll just keep those charts up there for you. All right, I think that's it. Okay, good session today, guys. Good session. I'll put a little music up. You can hang. I'm going to close the room in just a little bit, but I want to thank everybody for being here. All right, have a great week, and we'll be back again next Friday. So join us again. So once again, just as a recap, ROOT, LTC, DAL, and Ford are good ones, with ARKK not bad as well. LTC and DAL and even ARKK, you got to be careful on your stop loss placement. Okay, be very careful on that. All right. Well, thank you, everybody. Thanks, Stuart. Okay, good to have you here. Thank you, Frank, for being here, and Mark, both Marks, and Alexander. Great session today. You guys were great. Jim as well. Okay. Yep. Jim did good on DAL. All right. Thanks, everybody. We'll see you back here next week.